So last week we saw the markets in complete turmoil, especially after the whole PCE as well as Trump putting in these new tariffs on cars. As we can see right here, the markets did not do too well, especially that of the technology sector. However, well, right now it is not looking too hot either, seeing that the overall futures are actually down by a lot, even though it is 9:30 p.m. at night as if I'm recording this video. The Dow is down 0.41, the Nasdaq it is down 1.14, and the S&P 500 is also down 0.7%. So while there may be a lot of uncertainty going on right now and a lot of fear, I'm actually here to be the bright news in the room, right? Be the light in the dark panic room, because this actually is a great thing. If you guys have been here on the channel, y'all know that we have been calling for something like this for quite some time. So I'm going to tell y'all exactly what I mean by when I say that this is actually a good thing. So before we get started, make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rome. Make sure to follow us on X at Fatal Investing. If you'd like to join us on Discord, which is the best place to catch the live streams, shorts, and the videos, link to that is in the description below. So with that said, let's get started with this video. So last week we had a ton of news, starting of course with this: Trump putting in another 25% tariff on import of automobiles and certain automobile parts into the United States, which the markets did not like. And then on top of that, we also had PCE coming in a tad higher than expected. They were expecting 2.7 and it came in at 2.8%, which is the reason why you saw markets do this. However, right now markets are continuing to just not have fun because of a few other things. For starters, we got the fact that there is major uncertainty when it comes to Russia and Trump. As of 10 hours ago, Trump will put secondary tariffs on all Russian oil if unable to make a deal with Ukraine, and this is a range between 25 on the minimum to 50% on the highest one. And on top of that, we also have another day coming up that has a lot of uncertainty as well, which a lot of people, at least this article right here, is calling it Tariff D-Day, which honestly it's a little bit hyperbolic. I don't consider that. It's not D-Day. Like, do not consider the two together. But the summary basically is as follows. The administration global trade policy announcement on Wednesday is expected to overshadow the jobs report, potentially driving markets direction amid rising trade tensions and inflation concerns. Experts warn of stagflation risk, with inflationary pressures, economic slowdown, trade uncertainties, creating a challenging environment for equities and economic sentiment. ING outlines key questions on tariffs, predicting higher inflation, weaker growth, and potential long-term effects on the U.S. economy, with Europe facing diplomatic challenges. So D-Day is basically the day that Trump would like to put in a ton of more tariffs. Trump pushes aides to go bigger on tariffs as key deadline, which is April 2nd, Liberation Day, nears. So right there, we have a ton of stuff just jam-packed this week. The amount of tariffs that is expected to be put on the global scale is going to be insane. And on top of that, we have the jobs reports, which is expected to come in at 139,000 jobs, a little bit less than what it was last month at 151. Now, the main thing that I'm kind of concerned with this 151 is the revised version, because if this thing gets revised down and if the new one comes in much lower than with the 139, we're going to see some volatility right here. However, not everything is all doom and gloom. Well, actually, one major piece of this puzzle that may actually come in really nicely, that may actually bolster the markets, will actually be CPI. Now, the last time it was for the month of February. In April, we get the month of March. And what have we seen in the month of March regarding two specific subcategories of the food and the energy category? For starters, when it comes to the food category, we have seen egg prices plummet to an all-time low of $2.92. And this is as of March 26, 2025. You guys can see it hit peak at around basically the beginning of March at almost more than $8, and ever since March started, it has just completely collapsed, going from $8 and change to now sub $3 on an average scale. And then the second thing that honestly may be the biggest one, would definitely be gas prices, because gas prices have actually been falling a whole lot as well. If we take a look at AAA gas prices on a nationwide scale from a year ago, we can see that it was $3.54, and right now it is currently sitting at $3.16, which, if you guys do the math, ends up being at around 11% down from this year ago average. So CPI may actually come in significantly lower just with those two categories, assuming that they will apply to everything else. Obviously, the energy category has a lot more than just gas, right, or gasoline, and the food has more than just eggs. But if you just take that as an overall wide brush, then it should actually be just fine. Nonetheless, though, we are still seeing massive uncertainty in general. Now, in regards to the whole Russia thing, I actually just saw this post from Financial Juice. In fact, we're actually seeing some progress when it comes to the United States and Russia when it comes to the Ukrainian war. As of 2 hours ago, we got making progress on Russia and Ukraine, not currently implementing them. Trump to make a decision also on tariffs on Iran, that was also touted out. And we also got Trump tariffs to commence with all countries. Oh my goodness. This is why I'm saying that things are just really heating up when it comes to the whole tariff thing. And this is the reason why we're seeing the markets react as they do. Granted, they have recovered ever since starting this video. However, we can see that it is still very much in the red. So here is my ray of light when it comes to the current situation. For starters, this is not a moment to panic. This is actually a moment to be very, very happy, because all that this means is that we are getting a great opportunity to buy these great companies. So if you are still wanting to buy, not to trade, because remember, on my side, I only invest. So when it comes to buying these great companies, this is a great opportunity to buy companies, for example, like Microsoft, which, guys, is currently at $377 as of Friday close, $377.74. We are at a 52-week low when it comes to Microsoft. This is a major cash flowing company that basically prints money in the tens of billions of dollars every single quarter, and we are at 52-week low when it comes to this company. If this thing continues to go lower, it just serves as a better buying opportunity. Microsoft's not going to go away. We also have the juggernaut that is Amazon. Now, while not at 52-week lows, we can see that it is at $192.72. So just another example as to how we can actually profit from this, because on the 1 year, Amazon's down 12.16%. And to everybody wondering, well, what about ETFs? Well, let's talk about ETFs as well, because when the overall markets do fall, ETFs will also tend to fall. Granted, depends as to what companies are in there, but we could see an ETF, for example, like SCHD, which fell on Friday 0.61% to $27.58. Not 52-week low, but we are basically smack in the middle when it comes to this one. However, an ETF that is actually really falling, and well, it actually has a really, really big yield right now, mainly because it tracks the NASDAQ. It is, of course, JEPQ, falling 2.21% on Friday, and we're actually not even on the 52-week low when it comes to this. However, on the 1 year, they are down 4.5%, and the year to date, they are down 8.11%, which currently is yielding, guys, a whopping 11% on the trailing 12 months when it comes to this yield. So I just gave you all a few companies that are great opportunities to buy. There are a lot more. Did not talk about Apple, did not talk about any of the banks. JP Morgan's actually a really decent company, and well, if they continue to fall, that may be a great opportunity to buy as well. My whole point is that when you look at red, do not panic. It's not time to panic. It is time to take Warren Buffett's statement of be greedy when others are fearful and be fearful when others are greedy. So take advantage of this. This is not anything bad. This is actually great. If you are a long-term investor or even that of a dividend investor, you should be in love with what's currently happening, that you're given another opportunity to buy things much cheaper. In fact, let me just show everybody one more thing, and that is, of course, if we take a look at the 2020 collapse, we can actually see that the S&P 500 fell from 3,380 roughly to a low of 2,305. And you're telling me that people weren't panicking right here? Of course they were. But at the time, everybody was thinking that the world was ending. And if you guys actually took advantage of this opportunity, well, you have made very, very good profits ever since. Am I right? So I look at this very small dip. Actually, it wasn't even that compared of 2022. 2022 was much, much bigger. I see it as another great opportunity to buy companies going back to August 5th of 2024. That really is it. So not even that big of a deal on the grand scheme of things, but it does serve as a great buying opportunity in general. So anyways, guys, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And of course, if you would like to join us on the Discord, which you can talk to me and Mike there, the link to that is in the description below. Again, do not panic. Tell me what you guys are planning to do this upcoming week. If we see a massive amount of volatility, if we end the week super in the red, it is a great opportunity to just pile up on great cash flowing companies. So with that said, guys, peace out, and we will see you all next time.